Hey everybody, I'm Katie Evans with the Living 48 Real Estate Team. Super excited to have you back to one of our additional weekly videos. So this week we're going to be talking a lot about PMI. Now, if you're not familiar what PMI stands for, PMI stands for Private Mortgage Insurance. So when you purchase a home, you might be aware of the fact that you need to have homeowners insurance on the property. But there is also an additional type of insurance that you may or may not be required to have on your property. So this other kind of insurance is PMI, private mortgage insurance, and it is sometimes required by your mortgage, the person you're getting the mortgage through, the lender, to help protect them should you ever default on the mortgage. So that can cost you anywhere from like 5.58% to almost 2%. Like it varies from lender to lender, but it's something to keep in mind that you may or may not be required to have. Now, how can you avoid actually paying PMI? This is kind of a cool one. So there's a couple different ways that you can do this. We're going to talk about the one that you can use up front, and we'll talk about the one that you can use on the back end, okay? The one up front is maybe not totally accessible for everyone. When you pay 20% down, so when you put 20% down on the purchase of your home, you are most of the time not required to pay for PMI insurance, okay? So that's one way that you can avoid that PMI, is just make sure that you've got enough saved up so that you can put 20% or more down on the purchase of the home, and then you won't need to pay PMI. Now, another factor that you need to be aware of, this kind of is a little caveat to that. If you are using an FHA loan, the PMI will stay in place for the life of the loan. Okay, it doesn't matter how much you pay down. If it's an FHA loan and you stay with the FHA loan, it will always be there. So you can refinance that loan over to a conventional loan, and if you have 20% to put down on that loan, then again you can avoid the PMI on that. So the other thing that you can do is, once you hit 20% equity in your home, with either with an FHA or with a non-FHA loan, at that point you can then look at refinancing the house to get rid of the PMI. So my little tip for today is, our home values have gone up so much over the last few years that if you have just kind of stuck with your loan, you feel like, oh my gosh, I'm paying it off, I can afford it, it's fine, I don't want to go through the process of doing a refinance or anything like that. It may still be worth having a conversation with a lender to see if you are eligible to have that PMI removed. Okay, so if you have 20% equity in your home, contact your lender and just say, hey, I'm pretty sure that I have 20% equity in my home now because values have gone up so much. Can we get the PMI removed off of our home loan? So that is just a little extra tip for you there on the end. PMI, private mortgage insurance, yeah, you're going to have to pay it unless you're not going to have to pay it. So let's have a conversation if you have questions around that or any other real estate related questions. I am always here to be a resource for you for both the buying, the selling, and also the investing here in Arizona real estate. So let me be a real estate resource. If you guys have any questions, please feel free to reach out and we will talk to you soon. Bye.